Hi, this is Jeffrey Cohen. I'm talking to you today about a Chicgao Quantum Net Score run that we performed today for our own account, and therefore I can share it with you, and I would like to. So this was run on August 23rd. It was based on data from Friday, and here's our findings. So we ran it for the New York Stock Exchange American. So this is a smaller exchange, more risky. Typically, startups, exciting growth stocks, materials stocks, gold stocks, things like that. So here's what we found. The first is 142 stocks passed data validation. That means they didn't trade with a price too low or too high. They didn't have zero trading volume. They always had 101 or more shares traded each day. It means the betas were positive, not negative. Just a lot of good validation, what I call healthy validation of the stocks. The second is that there's a stock called GBR, and we look at one-day rises that are exceptional. Now, this stock rose dramatically in one day. And so you might look at it and say, look, if it rose really high, really fast in one day, maybe there's momentum or some interest in the stock, or maybe people are looking at it. And who knows, maybe it can go up again, or maybe it can go down. But that's typically something people might want to look at. We also pulled out 6 stocks that had a significant one-day volume spike. Now, when I say significant, what do I mean? I mean that it traded more than 130 times its average daily volume in a single day. So if the thing normally trades, let's say 100,000 shares a day, it trades 130 times that. So million shares a day, 130 million shares a day, or more. In fact, over here, AGE traded 207 times their average volume. Now, these stocks, they can attract volume. That is obvious. You see it, right? And so whether it's AGE or CVU or AINC, these are stocks where people have gotten very excited. Maybe they've memed them. Maybe they've gotten, to pump them, push them, or drag them down. And so these are stocks you should look at. The next one I just wanted to point out is, what are the market returns for the indices that we use over the year? So we went from August 20 to August 21 a year later. While the risk-free rate of return, 13-week treasuries, is 5 basis points. It's 0.05%. So you can always put your money away nice and safe, 5 basis points. The S&P 500, which is actually the GSPC, that's the inside ticker for the actual index, it's up 33% for the year. The RUT is actually the Russell 2000. That's up 40% for the year. And the NASDAQ Composite is up 32% for the year. This does not include dividends. And so, these indices are up pretty good. What I would say is they're not up as much as they were 3 months ago, or even 1 month ago. Because now, starting in August of last year to August of this year, the market has flattened a bit. If you'd have gone back to March, when COVID hit, those numbers would be 50-60% gains. But now we're moderating, right? 30-40% still pretty good gain now in a year. The next is the American Stock Exchange is not known for its dividend payers. But, in fact, 5 stocks paid more than 5% dividend last year. So while you're investing in a growth stock, you get paid while you wait. SACH actually paid an 11% dividend, and this is an actual yield, which is total payout, total dividends, divided by the average stock price for the year. The next is that 4 stocks had an extremely high beta, a beta of 2.0 or more versus the S&P 500. We use the ETF SPY, that's why you see it with a $, because it's ticker symbol, because it's nice. You can actually invest in the S&P 500 by just buying an ETF, an exchange-traded fund, which is actually a close-end stock that trades every minute of the day in the stock market when the stock market's open. And so UAVS has a beta of 2.4, RepX 2.35, CEI 2.25, UEC 2.07. So those are pretty high betas. We also found 7 stocks that had reverse splits. So it's interesting because this is where a company reduces the number of shares they have. It's anti-dilution in order to raise the stock price. And you see 7 of those there. I'm not going to give you the final recommendation until the end. I'm going to make you watch all the way to the end of the video. Our Chicgao Quantum Net Score selected the most efficient portfolio out of 142 validated stocks. By the way, here's the stocks. So if you want, you can run this model yourself. And finally, the most inefficient stock. Basically, this is the stock that has the most risk relative to its beta or relative to its market return based on modern portfolio theory. Is New Concept Energy, GBR. So all I can say is this. Our model predicts that GBR will fall faster than the S&P 500 during market declines. That it will be the most inefficient stock. It'll give you the most risk with the least amount of expected return. I don't know. What do you think? Good stock to buy? I'm not making a recommendation. I'm just telling you what the model picks. Now let me tell you the 4 best ones. So what the model does, what we do is we look at every single combination. So think of it as 2 to the 142nd power. We're looking at a lot of combinations to figure out what's the best stock portfolio, the most efficient stock portfolio that has the least amount of risk as a portfolio, but the highest expected return. And this is expected to greatly outperform the S&P 500, especially when the S&P 500 is going up. It's 4 stocks. It's RepX, it's TGB, it's UAVS, and it's UEC. And we would expect you to hold each of those 4 stocks in the same amount. So maybe you put $1,000 in each. 4,000 bucks, 1,000 in each. Now, what's going to normally happen is 1 or 2 of these is going to go through the roof, and the other ones are going to be more stable. And so it's nice because they all don't go up or all don't go down the same amount on the same day. They tend to zig and zag. So that's the conclusion. You would have paid $500 for this run. You would have said, Jeff, give me the BBB American Stock Exchange. We would have run it for you. It would have taken like 3 or 4 hours. But here you get it for free. 4 stocks, hold them in equal amounts. Much better than just buying and holding 1 stock. This is Jeffrey Cohen, Chicgao Quantum. I want to thank you for listening. Here's our logo. You take care now. Bye-bye.